Alright, so Amazon just announced a 20-for-1 stock split, including a $10 billion share buyback program, which was honestly completely unexpected because they already reported their Q4 2021 earnings several weeks ago. With Amazon stock having had an insane run-up of over 240% in the past 5 years to nearly $3,000 per share, this stock split announcement has been long awaited by Amazon shareholders. In fact, this announcement marks Amazon's first stock split since 1999 and the fourth since 1997 when Amazon's IPO took place, so it's been over 22 years since Amazon last split its stock. Needless to say, investors were pleased and Amazon stock was up over 6% on the news today. Now, once this stock split takes effect, this will end up slicing Amazon's stock down to below $150 per share at the time of this recording. So in today's video, we'll be discussing why Amazon would have announced this stock split in the first place, and then if you should buy Amazon stock before or after their 20-for-1 stock split. So if you enjoyed this video, just remember to hit the like button to help support my channel. I really do appreciate that. And then also, if you haven't already, please consider subscribing with those bell notifications turned on. I also wanted to thank Inverse for sponsoring today's video, but more on that later. Alright, so first of all, what exactly is a stock split and how does it affect you as a shareholder? Well, a stock split happens when a company chooses to increase the number of its outstanding shares to boost the stock's liquidity, usually by a factor of 2-to-1 or 3-to-1. However, in Amazon's case, the stock has risen so much over the past decade to above $3,000 per share only a few months ago, so they chose to do a 20-for-1 stock split, bringing the share price down to approximately $150 per share once it takes effect in June of 2022 and is approved by shareholders. Now, although the number of shares increases by 20 times, the share price will actually decrease by 20 times, so it actually doesn't change the company value whatsoever. Therefore, Amazon's market cap of $1.5 trillion today would technically remain identical before and after the 20-for-1 stock split. That also means as an Amazon shareholder, your personal ownership within the company will remain unchanged because Amazon is not diluting with these additional shares. For example, let's say you own 10 shares of Amazon before the stock split takes place, being worth about $30,000 if we assume each share pre-split is worth $3,000. Well, after the stock split, you'll then own 200 shares of Amazon stock at $150 per share, again being worth $30,000. So your total Amazon position remains unchanged. So technically speaking, there won't be any benefit to you as a shareholder when Amazon stock splits. But anyways, why would Amazon even want to split their stock in the first place? Clearly, Amazon does not have an issue with liquidity since they have an average volume of about 4 million shares per day, which equates to $12 billion in transactions. But I believe there are 3 specific reasons why Amazon decided to split the stock. Firstly, Amazon explains this split would give our employees more flexibility in how they manage their equity in Amazon. So just like Tesla, Amazon splits their stock so employees have better access to the shares through their employee share purchase programs. The second reason for the stock split is a bit of speculation on my part, but I believe that Amazon saw how Google split their stock 20-for-1, how everyone reacted so positively to it, the stock price went up, and therefore they copied Google's idea. Think about it, why wouldn't Amazon announce this stock split during their Q4 2021 earnings report that happened a few weeks ago, and instead they decide to announce it halfway through Q1 when Amazon stock is getting crushed? Andy Jassy has only been Amazon's CEO for less than a year, and the stock has only gone down since, which reflects badly on him, and I think Andy was looking for an easy way to improve investor sentiment about Amazon stock. So honestly, I can't blame the guy. It was clearly a great move and investors are super excited about it. That brings me to my third and final reason why Amazon is deciding to split their stock, and that is because it makes the share price more accessible for people looking to invest in the company. Splitting the stock effectively increases the demand for Amazon shares, both from retail investors as well as the options market. On the retail side, investors like you and I will now be able to buy Amazon stock with some spare cash within our accounts, and it also allows us to dollar cost average much more easily into Amazon stock when the price is lower. I know if I had some extra cash laying around in my US brokerage account, I'd be buying Amazon shares like crazy as it dips because it would be so much easier with a lower share price. But right now, it's a much bigger commitment if you do want to buy a share for $3,000. Now, of course, a lot of investors do have access to fractional shares, but that doesn't go for all of us. Furthermore, this increase in demand also applies to the options market. Currently, if you're looking to buy call options or sell put options on on Amazon stock, meaning you think the stock price is going to go up over time and you're willing to exercise at the strike price, it's going to cost you an astronomical amount. The smallest amount you'd have to have available in your trading account to sell puts at $3,000 per share would be $300,000 in total, since one contract equates to 100 shares of the underlying stock. However, once Amazon's stock splits, the minimum amount you'd need available in your account to sell puts, for example, would be somewhere around $15,000. And as we can see here, the total combined call and put options volume has been growing steadily over the past decade, with it seeing a huge spike ever since COVID began. So this stock split should open a tidal wave of retail investors and traders who aren't multimillionaires by any means, and can then take advantage of Amazon shares at the lower price. Now, before revealing if you should buy Amazon stock before or after the split, I want to tell you about today's video sponsor, Inverse. Inverse is a totally free stock research platform aiming to be the future social media of finance. Basically, they make it incredibly simple to do a comprehensive analysis on a stock, since they gather the financial statement data and all the stock data into one place. You can even compare stocks side by side and see all of the insider transactions for any company. Then once you're done, you can share your stock analysis in the main feed, allowing you to easily connect with other investors. For example, I've recently published a detailed research note on Tesla stock and why I believe it's going to be the best growth stock for 2022, so you'll have to check it out. Anyways, I find Inverse incredibly user-friendly and fun to use, so if you want to sign up for free today, make sure to click the link in the description or the pinned comment below. And with that said, let's get back into the video. So now the question is, should you buy Amazon stock before or after the stock split? Well, personally, I think the 6% move in Amazon stock today is a bit optimistic, considering the move is worth over $80 billion in market cap added just because of a stock split that doesn't affect anything other than a bit more demand for the shares. And if you think the $10 billion share buyback is great news, well, it only represents 0.2% of Amazon's market cap, so it really won't affect EPS that much at all. However, as we can see, Amazon stock is still down about 20% from all-time highs, and based on a current share price of $3,000, Amazon has an adjusted trailing PE ratio of 70, which is relatively low for Amazon and its future growth rate. We also have to recognize that Amazon has been sacrificing short-term profits to invest very heavily back into their fulfillment network, and they actually doubled it over 2 years since COVID began. Also, Amazon just raised Prime pricing to account for inflation and rising transportation costs, which should help the business increase its e-commerce profitability over the near term. Not to mention, Amazon's profit engine, AWS, is still growing revenue at 40% per year, while they just revealed their advertising business is growing at 32% per year, which are stellar numbers. So personally, yes, I think that Amazon is a great buy before the split, especially considering it is down 20% from all-time highs. But personally, I probably won't be buying, since I already own 4 shares in the company, and this stock split doesn't really change my thesis around Amazon. Also, if we look at some stock split examples from the past, like Tesla and Apple over the past 2 years, the stock prices have only gone up since. So if you think about it, there is another 4 months at least until that stock split takes place, and then Amazon shares will have that increased demand, and over this period they could actually see increased revenues and EPS at a very rapid pace. So we'll see, this could actually be very beneficial for the stock. But if you can't afford to buy 1 share of Amazon stock right now, and you also don't have access to fractional shares, you're just going to have to wait until the stock split takes place. In which case, the stock will become much more accessible to you, and buying after the stock split will still be a great decision in my own opinion. Overall, I'm super excited about Amazon splitting their share price by 20 times. I think it should drive higher demand for the shares, and hopefully it could lead to higher share prices in the future. But let me know what you think down below. Are you going to be buying Amazon stock before or after the split, or are you even going to be buying Amazon stock at all? Anyways, if you did enjoy the video, make sure to hit the like button and subscribe if you have not already, so you don't miss any of my future uploads. And as always, I will see you guys in the next one.